Good afternoon, everyone, and welcome. APAC today represents the largest and arguably the most competitive retail trading region in the world. But while the opportunity is enormous, the region is also incredibly fragmented across regulation, language, media environments, and investor behavior. So today we wanted to move beyond the usual conversations around which channels work and look at the bigger question. What actually drives trust, discoverability, and long-term investor acquisition across APAC today? And I'm very happy to be joined by someone who has been advising brokers and financial firms on communication and PR for more than 2 decades. Tony Cross, Director of Monk Communication. He has worked across both Europe and Asia since the early 2000s, helping firms navigate everything from media positioning and reputation management to IB relationships and market localization. Tony, great to have you with us.
Thank you very much.
Before we get into APAC and industry today, I would like to get a bit back to your beginnings.
Yep.
How did you start in financial services? What was your first job?
I've always been fascinated by finance. Had some family members worked in the City of London and just was so interested in what they did. So I set that as my goal. I read finance at university and sadly graduated in '94. The economy was pretty bad globally at that point. I ended up in consumer PR for a while, but eventually went into tech PR, found the company I was working for had CMC as a client, who at the time saw themselves as a fintech rather than a trading company. I saw the advantage here with the finance arm and built a financial services practice for that PR agency and went on to set Monk Communications in 2003.
You've been working with brokers since the early days of online trading. When you look at the APAC today, is retail investor acquisition actually getting easier because of technology and scaling, or harder because every market behaves differently?
I think it's getting harder because of technology as well as the fragmented market behavior. So if I go back to the first time I was having conversations with clients about working in Asia, it wasn't a case that everyone had a mobile phone in their pocket where they could place trades. There were physical offices, and I think the trust that conveyed, where people had to go to an office, you knew who the counterparty was. Yes, the spreads would be wider, whatever else, but it was just a far more trusting relationship. That trust component was so much easier to build.
And do you think the industry became too dependent now on performance marketing and measurable acquisition?
Absolutely. I sat on a number of panels yesterday, and it was fascinating to hear the attitudes towards marketing spend by some of the sales guys, the premium client managers who are like, I've got to defend every dollar I spend on a lunch to justify what the client's doing. It's all traceable down to the last minute, whereas you run a PR campaign, a marketing campaign, it's about building trust, it's about building brand, and I think they feel quite annoyed that we can't drill back to the same level of detail to say that's given a CPA of $100 or $10 or whatever. You can't do that, but it's all about building trust and brand. It's a far longer term view, but without it, I think people are going to struggle.
And IBs, they still dominate the acquisition across much of Southeast Asia. Why do they remain so effective despite all the regulatory and reputational risks attached to them? Well,
I think the regulatory risk is why they're so successful. It allows the lead broker to have an arm's length relationship with into the territory. They've got almost that deniability. We don't quite know what's going on here. It's all being done, but you've got that fragmentation. You've got those IBs who are very successful, great at building a community, know what works, can operate on a one-on-one basis with their client cohort. And that is so valuable because you're a big company sitting in London or Limassol or Hong Kong or Singapore, and you're trying to reach into parts of Vietnam, Thailand, Malaysia on a targeted basis. It's going to be an absolute nightmare to resource that up. If you can just outsource it to an IB, fantastic.
Mm-hmm. And a lot of firms think localization simply means translating campaigns into another language. From your experience, what are they underestimating?
Yeah, I think that that was the early attempt. I think people have learned a lot along the way, but there are so many nuances, so many little differences in terms of how people will, what people want to trade, what lot size they want to trade, what base currency they want to use, because obviously if you're working in a soft currency, you're not going to be able to fund that into a MT5 account or whatever. So, you know, there's all those little bits that the person on the ground is going to know and understand, especially if they're a trader themselves. They can explain that, they can act as the interface between the broker and those real clients who may not have the biggest deposit sizes, but are so important to building out the flow.
Okay, but what completely fails when firms try to copy strategies that worked in London or Cyprus into markets like Thailand or Indonesia?
What works or what doesn't?
What's failing?
What's failing?
Yes.
Yeah, again, I think you've got that problem, especially on the PR side, which is my core specialism, because you have a very different media landscape in those environments. You have a lot of media that is government controlled. So if there are question marks over regulation, people are going to, you know, should we be writing about this? Should we be giving these people a profile? And then also you've got the conflict of interest, where you have a media owner or someone who owns part of a media business also has a competing company. That could be any sort of finance or investment play. It could be insurance. It could be gambling. And they're like, we don't want to talk about this. We don't want to look there. So again, that causes problems when you're trying to promote the product over those existing channels in a way that we don't face in Europe.
And how do you overcome these challenges?
Well, I think a key way of doing it is looking bigger. So instead of saying this is a stop loss, or this is how an MT4 account works, or this is what, you know, this is how dollar-yen has moved today, take a step back, do things that promote the company, the virtues of the company, social initiatives, whether that's building a school or building a road, whether it's an educational program. Financial education, certainly in Europe, is woeful. I suspect in Singapore it's quite well developed because the Singaporean government seem to have their education policy very well in hand. But elsewhere in Southeast Asia, I suspect there's a lot of people who don't understand compound interest, don't understand the risks of conspicuous consumption. You know, there's an awful lot you can do there. I mean, I just think on that sort of CSR basis, if you do that, and then you're talking about the fact your brokerage has backed this initiative, that's of interest to the media. They're not talking about your product, so you move away from the regulation issue, and you also arguably move away from the conflict of interest one as well.
Okay, nowadays we are all witnessing that everyone is producing more content than ever. Blogs, videos, AI-generated articles, yet discoverability somehow feels harder.
Yeah.
Why is that?
I think it's the sheer volume of coverage, of content that's created. There was a number did the rounds a couple of years ago, and it said that was it 90% of all content ever created had been made in the last 10 years. That's now been updated, and the admission is the volume of content created is essentially, there's so little that is older than 2 years compared to what we've created in the last 2 years that it's not even worth trying to compare. So you've got more content than we've ever had before, and it's really difficult to navigate your way through that. Yes, we're seeing advances in search technology. AI is going to play a role here as well, but you've still got that eternal battle of, because everyone is now a publisher rather than it just being 1 or 2 outlets per territory, how do you then communicate with your customer?
And that brings us to another challenge. If everyone can generate infinitive content at almost zero cost, does trust become the real scarce asset at the moment?
Absolutely. I mean, I think that point about trust is something that can be very, so not easily, but it can be built using PR-based initiatives, using those big, take your CSR view, take your bigger picture view rather than, as I say, this is a stop loss, this is an MT5 account, whatever way around you want to take that step back, look bigger, and get that authority in there. And also take a more educational view. So you're not selling, you're informing.
Okay, and you mentioned something really interesting about LLM models, favoring uniquely created content from the user over paid placements or mass-produced AI content.
Yeah, I've been watching this quite closely for the last 6 months. trying my best to navigate this this space. And what I was always very concerned about the early advances in AI, that it meant you had this problem that anyone could create infinite content at zero cost and send it to everyone. And how's my inbox going to cope with that deluge? Thankfully, that hasn't really played out. But what I'm seeing now is the reports saying that LLMs are favouring unique content, so content that's created personally and not by an AI, to be ingested. And I've seen multiple reports from what I consider respected organisations who are validating this. And I think that's really important. As you say, Jessica, that does play back into the trust issue. If you can establish that trust, and if you can invest, and it's not a lot of time, it's just that shakedown of the concept that some people, especially marketing divisions, held, where they thought, well, we can get rid of the content team because AI can do it all. First of all, we realised AI wasn't doing a very good job of it. And now the LLMs aren't taking it in, and LLMs are going to become so critical in terms of search. If you haven't got the trust in the LLM, or the LLM hasn't got trust in your brand, you're never going to be able to populate.
And of course, I don't think that I should even ask whether you use an AI or not, but how, during your daily life and tasks, how much is it controlled by AI?
I think AI as a whole is in a fascinating place now because there's so much money being raised for AI-backed ventures. So it's filtering into every part of our daily lives, whether we like it or not. I try my best not to use it. I will, on occasion, I admit, put something into ChatGPT just to get some ideas, get some flavour. But I'm absolutely dead against having people write using these things, because you can tell, especially, LinkedIn posts are terrible now. You can tell so quickly when someone's done it with AI. You've got those M dashes, you've got that call to action at the end, which always reminds me of those really corny posters that were big in America in the 1980s, 1990s. Picture of a forest and a "you can do this" sort of banner at the bottom. And it really grates with me when I see that. So I'm very happy to learn again that the LLMs are across that and are marking it down in terms of inclusion.
So, but you're an expert, you're an industry expert, and you notice when someone is using an AI. Do you think that our users and normal people, they notice this? Did you tested it organically, the reach and everything, comparing the AI content and organic one?
No, it's purely from a subjective quality perspective, because what I do know the problem with AI is, because I have clients who use AI summaries and things like that, is the fact that the AI will get it wrong. If the AI is trying to summarize a 1,000-word article into 150 words, it's got to decide what's important in there. And I consider my knowledge of financial markets better than the AI's. So there was an example, Coca-Cola in the UK was going to buy Coca-Cola Africa. And as part of that move, they had to suspend the dividend or the share buyback that was ongoing. And that's a really bad signal for the market. But the acquisition was good. So the AI summary couldn't understand why the share price had gone down on this really positive acquisition news. And it's because all the investors were short-termists. But the AI summary had no interest in talking about the suspension of the buyback. It didn't see it as important. And I think it's examples like that where we've got to be so careful, because AI is going to very quickly risks fostering groupthink. And again, I think that's why it's so important the LLMs are flagging it and not giving it a high level of credibility. Okay.
And this brings us to one more comment and a question for you, that one thing we're seeing globally, not only across Asia, this is something global, that younger investors are entering market much earlier than the previous generations. Yeah. And they also consume information really differently. And how different is this Gen Z from previous generation when it comes to trust and financial decision making?
Yeah, I think they're more informed, because obviously they've got access to all this information. Whether the information is always of a high quality or not, I don't know. The phenomenon in the UK is termed FinTok, where you've got people giving financial advice in little TikTok short videos saying, if you do this and this and this, no risk warnings, no qualification of the assumption. Just the fact if you invest $100 a month into this tracker, by the time you're 40, you're going to have $1 million. And it's so they're exposed to that. So I think they see the potential. The other thing that I think is being evidenced is they are more willing to work with brands that they haven't heard of. In the way that their parents or their grandparents would want to be using a brand, Maybank, HSBC, whatever, that they've heard of to make the investments. They're very willing to move with challenger banks, with the brokerage industry in many cases, I guess, where the proposition is packaged up correctly to meet their needs. And I think those needs are different. What we're certainly seeing in Europe is people being less focused on cost than the previous generation, more on convenience. They want everything in one place. These one-stop shop platforms are certainly answering that question. But that's the direction of travel.
Okay, and you also mentioned that the companies may need to return to old school profile building, using education initiatives, community projects, media-worthy campaigns. Is the industry ready for this kind of a shift at the moment, or the most firms are still focused on short-term acquisition metrics?
I think we could see developments here quite quickly now that the way the LLMs are working with AI-generated content is becoming clearer. And we still have this overhang of the regulatory problems, especially in certain countries in APAC, that we've got to find another way ahead. How does a broker stand out from the crowd? And I think those big, I think about the stunts I used to be involved in my early days in PR in the 1990s, where we would, if you costed it on a CPA basis, you would never be able to justify it. You'd be talking about tens of thousands of dollars per piece of product sold or whatever, but it made a real lasting impression with the audience, and it cemented that brand in their mind for a long period of time. So PR isn't, I think if someone thinks that a PR or a content-based plan is going to convert like that, then they're wrong. This has got a really long lead time on it, but it's about establishing that credibility and making sure that if things aren't going well, if the market's in turmoil, people know that they can trust that brand. That's a brand they recognize, and that's the brand they're going to go to.
Okay, and for the end, we talked a lot about growth and acquisition, but there's also a little bit of uncertainty hanging over the industry right now. So when you look 5 years ahead, what worries you more for this industry? Regulation, AI disruption, or the loss of the trust we mentioned?
I think that that trust issue's an interesting one, because this might seem tangential. Bear with me. What we've seen in recent weeks in prediction markets lays bare how open to abuse market infrastructure can be. If people have got inside information, some people will use it to their advantage. And I think as we see the proliferation of brands, proliferation of information, that's becoming easier to do. But equally, the technology has the ability to help lock that in. I think as things move more onto the blockchain, you're going to get that security. Again, it's about trust. It's about knowing that the counterparty is good for the trade, good for the risk that you're placing with them.
And the last question for today, if you were launching a brokerage in APAC today with a limited acquisition budget, where would you spend your very first dollar?
Can I say hiring me? Or I think it has to be about that. How do you differentiate your proposition from everyone else's? There was, again, a reference point I picked up yesterday. More than 100 brokers in Thailand working with IBs, with IB networks, and that's crazy. You think about the size of the country, the number of people in operation there, the amount of overlap. I think the place to start would be to look at acquisition. Can you merge? Is there someone out there who's got a distressed asset? Because again, that was a point that came up in one of the great panels yesterday, was to say, really, what we know is the big inefficiency here is the fact that there's more companies than are needed operating in this space. I think, so look for synergies probably through acquisitions.
Okay, thank you, Tony, for joining us today. And this brings us to the end of the Finance Magnates Singapore Summit. Thank you to all of our speakers and moderators and everyone who joined us today, and see you in London soon.